Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Bank of China Limited annual report. Bank of China Limited offers a wide range of banking and financial services to its customers across various segments. The corporate banking segment provides current accounts, deposits, loans, trade-related products, and other credit facilities to corporate customers, government authorities, and financial institutions. In addition to corporate banking services, the bank also offers personal banking services through its personal banking segment. This includes savings deposits, personal loans, credit cards and debit cards, payments and settlements, wealth management, and funds and insurance agency services for retail customers. The Treasury Operations segment provides foreign exchange transactions, customer-based interest rate, and foreign exchange derivative transactions, as well as money market transactions, proprietary trading, and asset and liability management. The investment banking segment offers debt and equity underwriting and financial advisory, sale and trading of securities, stock brokerage, investment research, asset management services, and private equity investment services. The bank also operates an insurance segment that provides underwriting services for general and life insurance business, and insurance agency services. Furthermore, the company engages in debt-to-equity swaps, aircraft leasing, and financial leasing businesses. With its extensive range of services, Bank of China Limited has established itself as a leading banking and financial institution in China and internationally. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a financial institution can be categorized into several key areas. Revenue growth is driven by various factors, including increased share of profit from overseas commercial banks and comprehensive operation companies, growth in cross-border settlement clients, and strengthened lead in domestic market for foreign currency deposits and loans. Emerging economies, China's steady economic growth, and solid results in terms of high-quality development also contribute to revenue growth. In addition, the institution has seen significant growth in its capital market activity, wealth management, and asset custody businesses. The expansion of agency commissions, bank card fees, and net trading gains have also contributed to revenue growth. Furthermore, the corporate banking business has experienced a 4.17% increase, with key areas including strengthened resource coordination, enriched products and services, financial supply, major projects, and green finance. The institution's personal banking segment has also seen growth, with an increase of 2.66% in personal customers and operating income of RMB 231.387 billion. The account management business has experienced a 7.83% increase in accounts opened via the Greater Bay Area account opening service. On the other hand, revenue decline is driven by factors such as decrease in credit commitment fees, decrease in spread income from foreign exchange business, and mining and processing of common non-ferrous metals ores. Credit impairment losses also contribute to revenue decline. The company has consistently demonstrated a positive trend in its operating cash flow. In the first 2 quarters of the year, the company generated significant amounts of cash, with Cone producing RMB 760,804 million and Qtwo generating RMB 17,587 million. This positive momentum continued throughout the year, with net cash inflow from operating activities reaching a substantial RMB 812.03 billion in 2025. Furthermore, the data provided for both 2024 and 2025 shows that the company's operating activities have consistently generated more cash than its net cash flow from these activities. For instance, in 2025, the cash inflow from operating activities was RMB 862,333 million, which is higher than the net cash inflow of RMB 812.03 billion. This discrepancy suggests that the company's operating activities are generating a significant amount of cash, which is then being utilized to meet other financial obligations. Overall, these figures indicate that the company is indeed generating positive operating cash flow, with its operating activities producing substantial amounts of cash throughout the year. The company's debt level has undergone significant changes over the past few years. Initially, total liabilities increased by 9.3% from RMB 32,108,335 to RMB 35,149,952. However, this trend is not consistent throughout all reports. On page 412, it is stated that total debt increased significantly from 2020 to 2025, with a total increase of RMB 9,733,612. Furthermore, on page 414, total financial liabilities increased by 12,925,145 million renminbi from 2024 to 2025. In contrast, the company's interest expenses have decreased substantially over the past year. According to various reports, interest expense has decreased by RMB 62.403 billion, 10.02%. Accreted interest on impaired loans has decreased by 11.3%, and cash payments for interest on bonds issued have decreased by 6%. Additionally, total interest expenses decreased significantly in 2025 compared to 2024, with a decrease of -$41,560. The performance of various segments and regions in the financial industry has been mixed. In terms of total assets and profit before income tax, Hong Kong, Macau, and Taiwan showed a relatively modest increase of 4.02% and 5.11%, respectively. On the other hand, other countries and regions experienced a more significant surge of 15.93% in total assets and 12.86% in profit before income tax. The online service channels have been a standout performer, with notable success in various areas. Overseas financial market services and bond investment by overseas institutions have both performed well. Additionally, trading operations in key cities such as Beijing, Shanghai, Hong Kong, London, and New York have also seen strong performance. The Chinese mainland has also shown impressive results, contributing to the overall growth of the industry. Management is emphasizing the bank's role in supporting national policies and contributing to China's rejuvenation. They expect operating profit and net interest income to increase by 8-9% CAGR over the next 3 years, with stable cost-to-income ratio and above regulatory capital ratios. The company's strategy focuses on promoting high-quality development, delivering steady growth, maintaining robust risk control, strengthening global network, and supporting real economy innovation. Management prioritizes both development and security, emphasizing risk management, compliance, ESG risk management, and commitment to high-quality socioeconomic development. Key areas of focus include improving customer experience, expanding merchant network, enhancing ATM services, and optimizing portfolio structure. The bank is also strengthening its risk management and control capabilities, improving forecasting and analysis of financial markets, and promoting high-quality development of asset management business. Management has a strong outlook with increasing revenue and profitability, expanding into new regions, investing in associates and joint ventures to drive growth, focusing on digital transformation and innovation to improve efficiency and competitiveness. The company is committed to high-quality development, green finance, and sustainable growth, positioning itself for future success. The company has a history of paying dividends to its shareholders. This is evident from various pages within the document, which consistently indicate that the company has indeed paid dividends. For instance, on page 16 and page 37, it is explicitly stated that the company has paid dividends. Furthermore, the total amount of dividends paid out is also mentioned in several places, including page 122, where it is noted that distributed cash dividends were made 7 times with a total payout of RMB 367.555 billion. In addition to paying dividends, the company has also proposed final dividend amounts for certain years. For example, on page 9 and page 15, it is mentioned that the proposed final dividend on ordinary shares for 2025 is RM 169 per 10 shares, before tax. This suggests that the company is committed to continuing its dividend payment policy. It's worth noting that while the company has paid dividends, there is no mention of share buybacks in the provided text. That concludes the financial summary for Bank of China Limited. Feel free to comment below, and I will be happy to answer them when possible.